Hello everyone. Today I'm doing some of my most in-depth stock analysis and valuation I've actually done on this channel. Typically we've done a little bit more casual and I like to try and make it for a bit of a broader audience, but this is something that I got tasked to do as an assignment and I actually got really into it and I had a great time and I figured, you know what, we'll try and see and put out some more in-depth stock analysis and see what the general reaction is and what the response is. So today we're going to be covering ASML. Now I actually covered a recent earnings report of theirs and you can see why, because I was tasked with doing a full in-depth stock analysis on ASML and I wanted to make sure the thesis was still kind of intact, at least where we were coming from. So I do like to give a disclaimer at the beginning of any stock analysis, stock valuation video I do. I know it's something that not necessarily a lot of YouTubers like to really hyperfixate on or focus on when they do this, but I think it's important to me to at least explain this. So YouTube, at least for me personally, and how I hope a lot of you guys view it, YouTube is an incredible starting point for if you're trying to find a company you may be interested in, if you're trying to learn more about a company, or if you're just trying to get good investment ideas. That being said, it should, and I highly implore this, it should not be your only source of research before investing into investment ideas. I know a lot of investors and a lot of investment YouTubers, they really like to kind of put on the super salesy approach, and that's because it does great for all of the metrics they care about. I'm someone who it would go against me as a person to, especially how much I prioritize trying to do my own research, to just say, oh no, my research is more than capable for you. It may not be, and in fact, I could have missed stuff completely. I mean, some of these annual reports I was looking through are going to be 400 plus pages. So I'll give a quick breakdown of where I actually got my sources because I think it's highly important. The vast majorities of the information is going to come from both documentaries in the ASML facilities when we kind of talk through what they do as a company, what their models, what their products are, and then we're going to be talking a little bit about stuff that we pulled from the annual reports and quarterly earnings, and then the rest is going to come from Bloomberg, specifically Bloomberg Terminal, and we'll get a little bit more into that when we start going through the actual valuation models and all of that. So without further ado, I hope you're excited as I am and we'll get this kicked off. So what exactly is ASML? Well, ASML is in the semiconductor space, but they do a highly specialized service that we're going to actually talk about. Now, in order to kind of give a general rundown of the semiconductor space as a whole and where they fit in, I wanted to give just to kind of kick us off a very brief rundown of both how a semiconductor is made, and this kind of works a little bit into the supply chain as a whole, and then how these EUV lithography machines and DUV actually work. If you're more familiar with this, feel free to skip ahead into the video till we get into a little bit more of the number crunching and finance stuff, but if you want to learn a little bit more something, feel free to stick around. Okay, so we're going to start off with a very brief, basic explanation of how a semiconductor is made. It all starts with the blueprints. A lot of these companies that do the blueprints, I think when we think of as companies in the AI race, so think of NVIDIA. NVIDIA is one of the best companies at creating these blueprints and these chip ideas that will power the future of AI, for instance. Or Apple would even be a great example of these blueprint companies where they come up with more and more advanced chips that they can put into their iPhones. So it all starts with the blueprint companies. From there, they will actually contact Foundry, which is going to be kind of our last step. So when I say Foundry, it's mostly Taiwan Semiconductors, but you can still see Samsung or Intel company. Now they'll contact the Foundry company and they'll provide them with the blueprints. From there, TSM has to get some the raw materials for the actual creation of the semiconductor. So you're going to think the companies that actually get the silicone, the companies that kind of create these wafers to then basically print the semiconductor chips on and all of that. Or also the coding companies, which we will talk about in the future. Now I've roped this third step into one because a lot of these companies in the what I would consider the beginning, middle to end of middle stages of the semiconductor creation, they've actually switched from providing the services themselves to selling the machines that actually run these services to the companies such as Taiwan Semiconductors. So in that stage I just have it as lithography because this is where ASML operates, and they're going to be on the earlier side of semiconductor creation. A really, really basic way to explain what lithography is that I think is highly comprehensive and easily digestible is if you think about the creation of a house, for instance. You have your blueprints, you have the companies that bring your raw materials, your lumber, your rocks, your anything you want, your bricks, whatever. And then you have the people who actually create the house. ASML is basically going to be the company that creates the house up until the point where it needs to be filled. So they actually build out the structure of the house, they do all that, and then they kind of hand off back to TSM, who using different companies' machines will do the actual filling of the house, all of that. So that in essence is a very, very brief explanation of where lithography is on the supply chain. Now, we will be getting into what I think is probably going to be either the more dense or more fascinating area of this presentation, depending on how you feel about technology as a whole. This is some of the most complex technology on the face of the earth. In fact, Martin Vanderbrink, the company's longtime chief technology officer, said that the EUV machines were so complicated there wasn't a single person at ASML who start to finish could explain how these machines work. So that being said, I will now attempt to do that in a very poor, not tech-heavy way of basically summarizing, roping thousands of steps together into one brief breakdown of how these machines actually work. So for starters, the EUV machines, and I think this is some of the coolest part, they're the size of a double-decker bus. That is massive. You might be, and reasonably so, asking, why are they the size of a double-decker bus? Well, EUV lighting only exists in a vacuum. It can only operate in a vacuum. This is because the EUV lighting basically gets absorbed by everything. EUV lighting does naturally exist, but it only exists in one spot, and that is the corona of the sun. So in a brief instance, ASML is basically creating a vacuum comparable to near the sun inside a double-decker bus filled with hundreds of thousands of different parts. That is crazy. Okay, so we have our double-decker machine. How do we actually utilize it? Well, it all starts with the wafer placement area and prep, basically. I mentioned that some coatings in the raw materials will actually create coating, so think, for instance, they're basically prepping the wafers so that the light can, instead of just being absorbed, can actually do its job and make kind of the incisions you want and the structure of the semiconductor chips. So they do that prepping area. It's going to be in the middle where the light ends, so kind of in this area is where they are going to be placing their wafers. Next, in this area right here, we have what I have dubbed as the liquid tin shooting gallery. Basically, they have such small drops of tin that continually shoot in a straight line. It looks almost like a spider web. These are very, very small, and this laser actually shoots 50,000 times per second. And it's when the laser shoots the liquid tin that the EUV lighting, the 13.5 nanometer, what I've dubbed laser lighting, actually is formed. From there, it'll proceed to bounce off a series of mirrors, specifically the Carl Zeiss mirrors. These are basically the flattest surfaces on Earth, and that's no exaggeration. Think of any mirror you've ever seen, or any painting, or any flat object. These would measurably be the flattest objects on Earth. From there, it'll bounce around before kind of landing into your blueprint area right up in here. After it lands into the blueprint area, it'll continue basically bouncing off until the laser actually connects with your wafers, and that is where the magic happens. Now, something I think is important to note, and also gives me a little bit of a chance to ramble about a really weird thing in the semiconductor space. They have a weird naming convention. And by that, I mean the most recent machines they are dubbing the 3 nanometer machines. And you might hear nanometer, you may have no idea what that is. We'll talk about it in a second. But basically, the size of a germ is about 50 nanometers. In reality, the nodes that these actually create are not going to be 3 nanometers, emphasis yet. That is because around semiconductors used to be named according to actual measurable things, and around the point of 45 nanometers, we kind of lost naming it specifically based on actual measurable things. This is because we're dealing with things smaller than the size of germs at this point, and there isn't really a governing body that fusses at them. So when you hear 2, 3 nanometer, I'm not just being a hater and being like, oh, it's not actually that, it's actually 5. Like, no, it's more of a branding material, and think like it's kind of become the same as like the i7, i9, i10. It's more of a brand marketing material, and it's basically just means it emphasizes that they're going to be both more powerful because they have significantly more nodes and all of that, and there's more like area to operate in, and also they're going to be a lot less energy intensive. So weird naming convention. We're still dealing with really, really small sizes. With the high in A, they think they can potentially get it all the way down to the nodes being 6 nanometer. And then we actually have ultimate in A, or it was 7 nanometer. Let me go back. About 7 nanometers. And then from there, we have what they're considering the ultimate NA, which they have the ideas for, but there isn't any need for it yet. And they think they can kind of get that down to basically the smallest EUV lighting possible until we get to almost the size of atoms, around half a nanometer. So that's a little bit of the interesting naming conventions. I'm going to be referring to the machines as the 2, 3 nanometer because that's what they're referred to as, but just know we aren't necessarily all the way down there. It's still incredibly small and way beyond the size of germs and closer to atoms than germs at this point, but they aren't exactly 3, 2 nanometers, things of that nature. Okay, now I'll walk us through a little bit of the company's history. ASML was founded in 1984, actually, from a partnership between Philips and Advanced Semiconductor Materials International, now just ASM. They were very, very original with their naming, as you can tell with ASML. It was actually, if you go to the company website, you can kind of see this. They actually basically operated out of a shed. It was kind of funny to see actually on their website. And this was a process that took hundreds of billions of dollars in R&D spend. For a long time, they didn't actually think EUV was even possible. And really, ASML, they weren't generating much of a return at all for Philips and ASM, and that's why when they actually IPO'd in 1995, Philips and ASM sold a significant quantity of shares. Probably the worst decision they ever made was actually selling that. In 2007, there was an acquisition that ASML conducted of Brion, and this not only kind of built relations into Silicon Valley, but it also would mark the transition from simply trying to do all of the process of lithography in-house to actually the what they would consider the holistic lithography business model. And this, simply put, means they are going to be doing the before, middle, and after of lithography, not just lithography. And also they wanted to try and focus on shifting into selling the actual machines that use this EUV technology and at this time DUV in 2007, but would later be EUV technology. They wanted to sell the machines instead of doing it all in-house like Taiwan Semiconductors, basically. In 2007, they'd also start their metrology business. Hopefully I've said that right. It's not necessarily the biggest of what generates the revenue for them, but it's a little fun side option they have. And this kind of measures and corrects the chips during the lithography process, basically. They don't have as large a market share in this, but it's still a third business they have. From here in 2010, they'd actually ship their first prototypes of the EUV lithography machines to research facilities in Asia. And then we get into 2013 where they actually acquired Cymer and they were able to release the second generation of EU machines with the improved lighting. Also, something really fun to note because I had a blast researching this and learning about this. In 2013, ASML is also partially responsible for the death of the American semiconductor industry. Death's a bit of an exaggeration, but the U.S. semiconductor industry getting knocked off the top rack. This is because for a long time, EUV was just a theory, and there were a lot of people in the ASML story, suppliers, competitors, that didn't see a need for it, didn't think it would actually ever happen, and thought ASML was just spending a ridiculous amount of money and wouldn't ever see any return on it whatsoever. Then, in 2013, ASML partnered with both Taiwan Semiconductors and Samsung, who really saw the value in EUV technology. And it was through this partnership that they were actually able to finally have production-ready EUV machines shipped in 2016. Now, how did this kill the American semiconductor industry? Well, Intel, they had already previously approached about EUV, and Intel was one of the companies that didn't really think it would actually work out how ASML thought it would, and so they completely ignored this partnership. And it wasn't until 2023 that Intel started using EUV in chip creation at all, and Taiwan Semiconductor was able to in 2018, so already they had a 5-year gap in creating the most advanced chips on Earth compared to Intel, and Intel really lost market share during this time. In 2020, we saw the 100th EUV shipment, and then in 2023, they shipped their first high-NA next-generation EUV systems. And these are going to be the ones that can get us down to about 6 or 7 nanometer nodes, which is incredibly small. Okay, now, one of the most exciting things about ASML is they basically act as a monopoly. While it's hard to find specifics on the DUV market share, conservative estimates put it at around 85% of the DUV market. It's also worth noting that when ASML actually IPO'd and early on in their making, they were basically the underdog competing against Nikon and Canon. However, over time, they crushed Nikon and Canon. And if I say Nikon and Canon and your first thought is cameras, that's a large part why your first thought is cameras. Is they basically destroyed their competition, like to that extent that they are now just making cameras basically and taking very, very niche segments of the market. They're also the only company on Earth that can do any EUV technology. Now, I'll do a little bit of a differentiation between DUV and EUV. I probably should have done this earlier, but I think it's a good time to bring it up. EUV technology, the nanometers of the actual lasers and how small they can get, are significantly smaller than DUV. At this point in time, though, still the majority of chips on Earth utilize DUV. Everything but the most advanced chips on Earth utilizes DUV. So ASML really is ahead of its time on this, but something of note that I think is really interesting, in calendar year 2024, ASML only sold 44 EUV machines. And in comparison to all of the machines they sold from their metrology, from their DUV, from their EUV, this represented about 9% of the actual machines sold. However, the EUV represented about 44% from all of the revenue of the machines being sold. So as you can see, we're talking about a very, very large shift. For DUV, their price range is about $5 million to $90 million, depending on the specialization of each machine. And the EUV technology can go from $200 million to $350 million. Now, in metrology, I mentioned it earlier, it's not really a major part of their business. The E-beam metrology in specific is around 74%. However, in terms of like the metrology market share as a whole, it's about 24%. And it's really not the main focus or core business for ASML. Now, in terms of market segmentation, they're selling a significant quantity of their products to China. However, one of the things that is kind of in the way of them really becoming significant in China is that they're only allowed to sell their DUV machines. As you've seen recently, we, the United States specifically, and a lot of countries around the world, to be fair, don't want China to get the most advanced technologies. Now, whether or not this breeds competition with China actually trying to come up with its own lithography companies, we'll see. I don't think they'll catch ASML for reasons I can get into a little bit later, but it's still out there in terms of whether or not us trying to be so selective with what countries actually get the most advanced technology, and all of that is going to breed significant competition out of China where they suddenly create their own booming chip market. That's still up in the air. A lot of sources think they can't catch up, which fair, but as of right now, China can't get access to the EUV machines. And actually, funnily enough, they aren't super pissed about this. You'd think they'd be a lot more mad than they are, but when ASML went to bat with the EU about this, a lot of the Chinese customers they had actually said ASML was just as much a victim as they were in their inability to sell EUV machines to China. So, yes, it sucks that they can't sell EUV machines to their largest geographic segment, depending on how you feel on that whole issue. I personally kind of side with China on this one, specifically because I would much rather have European and American semiconductor companies be the leading competition over there versus China now being incentivized to really push behind Huawei and try and make competition. And if Huawei or any of the Chinese companies becomes the dominant player in semiconductor creation, who knows what happens then, but as of right now, that's probably one of their biggest problems, is their inability to sell their DUV or their EUV machines to China. Now, the high NA EUV machines, they're still in production and in development. They did actually ship their first one in 2024, but this is still a very, very new technology. And as I mentioned earlier, a lot of the market doesn't actually have a need for it yet. They're very ahead of the curve. When I brought up earlier the ultimate NA EUV systems that they've touted, they don't even see that they could have demand until 10 to 15 years down the road. They are so ahead of their time, it's actually crazy and kind of interesting to look at. Now, one of my more fun areas is looking at the Porter's 5 forces. I'm a huge fan of these Porter's 5 forces, and hopefully the radar chart that I was able to make is kind of interesting. I can walk you guys through it real quick. It's really fun. So for threat of new entrants, I personally put this as a very, very, very low risk. And all the scaling is going to be out of 5 for those of you who are unaware. I put this as a 1. This is because they have no real competition whatsoever. EUV is going to be a very, very hard space to get into. It was a over 20-year process, hundreds of billions of dollars spent, and at least in terms of how I'm viewing this, in order for there to be a real good competitor in the EUV space, they basically have to go to ASML because, again, they're the only company that's been able to achieve this at all. They'd have to go to ASML and they'd have to basically buy talent from ASML and way overpay them in comparison to what ASML is already paying them. And I just don't see this as very likely. Yes, I guess if China wanted to put so much of their money at this, maybe they could. But even then, you're going to have to buy whole teams of people just so they can have a hope of trying to replicate the EUV machine's success. For competitive rivalry, I put it at a 2. Now, I know they're a monopoly in EUV, but currently DUV is not the main focus. It's where most of the money is coming in for them. They do want to transition into solely EUV in the future as we get more advanced, but right now they have a large technology gap in EUV machines specifically. They aren't in the most demand except for in the AI race right now, and then in some of the more advanced semiconductors, such as the most recent Apple chip. Those are going to be examples of where the EUV technology is needed. But in terms of cars, a lot of computers, a lot of older technologies, they just don't have a need for it. And so there is that little bit of 15% or so market share that is not operated by ASML. So that's why I have a competitive rivalry score of 2. For a threat of substitute products, now this is something that is currently a 1 because there isn't a good alternative to lithography, but we're in technology. Anything can happen. Somebody could create a new technology out of nowhere, and it would be really funny to witness, but this score would basically go from a 1 to a 5 instantly. Like, we just don't know. We don't know, but there isn't a good indication that there is an alternative to EUV that's actually, like, useful in mass production. So currently have that threat of substitute products at a 1. Now, supplier power. This is actually where the majority of ASML's risks are going to be. This is because they have specialized machines to the point that they are heavily reliant on not only ASM, but also the Carl Zeiss mirror manufacturer company. They represent large chunks of their actual suppliers and their revenues going to suppliers, very large chunks of that. And that's because they've gotten their machines so specialized that they require very specific materials in order to create these machines. So that's going to be where the majority of the risks are allocated. And then buyer power is currently a 3. TSM does make up our largest customer by far because, again, TSM is doing the vast majority of the most advanced chips. I think the stat is still 95% of the most advanced chips on Earth are coming from Taiwan Semiconductor. So, yes, TSM does have some power over them. At the same time, ASML has power over TSMC, though, in that they have complete pricing power because if Taiwan wants to make any advanced chips, they have to go to ASML and basically say, hey, we need these machines. And if ASML one day was like, we're going to pull a Martin Shkreli playbook and you're going to pay us instead of 300 million, 3 billion, yeah, they'd blow up the supply chain, but that's something they could do. So I put that buyer power at a 3. Now, we're going to be looking into a little bit of the fundamentals of the company. I wanted to draw your eyes specifically on their long-term solvency ratios. This is going to be because it's going to affect greatly some of our valuation methods. I do use fundamental analysis towards the end, and as I'm setting this up for, our WACC was ridiculously high, basically because they're pretty low debt. Typically what we see is when ASML actually does an acquisition, and they're some of the better companies at doing acquisitions, it's because they identify a roadblock that is probably like 5+ years out in the future, such as when I mentioned their Scion one. Hey, in order to take this to the next level, we would want to find a specialized company that could create better lithography lighting, so we're going to go find the only company on Earth that does that and acquire them. So they have pretty low solvency ratings. Everything over here is looking very good. Their margins are actually increasing, and they have confirmed their 2030 guidance that they want to see that close to 60%. So highly satisfied with all of these. Now, I did a little bit of their revenue and profit margin. I will bring up some things because we do see a little bit of a drop there in the 2023 to 2024. It does stable out eventually, but basically ASML gives their guidance that basically 1 out of every 5 years they expect to be what I would consider bad. And by bad, it's not like negative by any means. It's just instead of a growth rate of 30%, they might have a year where they do 5%. And this is because of the cyclicality of the semiconductor industry as a whole. Also, they're subject to sometimes supply chain malfunctions. I mean, when you want to ship out a double-decker bus EUV machine, it takes 7 Boeing 737s and 30 to 50 semi-trucks to actually ship these things. Like, it can take a long time. And then we see their profit margin right around 30%. Personally, I'd like to see it a little bit higher. They do have some pricing power, but they really don't want to utilize it. Actually, I know where I'm going to fit this in. I was going to talk about Moore's Law, and this is a great time to do it. Why is this profit margin not higher, being in the semiconductor industry? Well, ASML utilizes Moore's Law. Moore's Law is going to be coming from the Intel founder. Basically, Moore's Law says that every 2 years, the number of transistors on a semiconductor are going to double. And by keeping Moore's Law intact, ASML sees significant long-term opportunities. Basically, they are bypassing all of their short-term opportunities where they could really wring the profits out of their customers, and instead they want to keep the supply chain intact and basically keep the industry going as a whole, and they're very supportive of that. So that's why we don't see the profit margin much higher, even though they're a monopoly. Now, I did a little bit of a price comparison. This is pulled directly from the Bloomberg terminal. It basically just shows ASML, ASM compared to VOO, my absolute favorite ETF. And they're pretty close comparatively if we look at ASML and VOO. There are times when ASML drastically underperforms, and then we're really seeing a connection to the AI hype with ASML, which is also going to come into my final recommendation at the end, but we're really seeing them kind of tie to this AI trade. But overall, they're pretty matched in the past couple of years to the S&P 500. Now, in order to actually use some of the valuation techniques we got tasked with, my group and I had to find competitors specifically for our market multiples approach. We took the two highest correlations, and this is really because there aren't good competitor correlations. There aren't good companies that really do something similar to ASML. So we took the highest return correlations, but honestly, I wouldn't put 2 cents into the market multiples and the peer comparisons I'm going to go through. It's just something we got tasked to do, and I think is interesting to apply some of these ratios to ASML and see what the value could be, but overall it's kind of hard to do any peer analysis when they don't really have that many publicly traded peers and they don't have good competitors. Okay, now out of the two that we ended up selecting, that being ASM and BESI, they do completely different things in the semiconductor value chain. Now over on the left, you can look and see in the lithography business, you specifically have ASML, which is doing the lithography, and then TCL, which is basically doing the coating, and as I mentioned earlier, in their prep phase of the actual wafers, these are going to be the companies that create the substances that will, in fact, allow the 13.5 nanometer EUV lighting to, instead of just being absorbed, because it's absorbed by 99% of things on Earth, instead it'll actually do its intended purpose and hollow out the space for the fabs to actually complete the semiconductor production. Now, we're going to get into a bit of the valuation models. So as you see on the left, we have our football field. This is going to tie together all of the different valuation models utilized in the ASML analysis. Now, as you can see, we have the market multiples where we applied BE and ASM. They were really the only ones we saw wild swings in that did see undervalued material. But again, as I mentioned earlier, I wouldn't put a grain of salt. Same with the dividend discount model, because with the dividend discount model, why we didn't necessarily go with that as our recommendation, and why I don't think you should put that much emphasis in it at this 42 euro a share intrinsic value based on a dividend discount model. They aren't a mature company yet. I mean, yes, they've been around a while, but they are still a heavy growth contender. They basically have a compound annual rate of around 20% a year. This isn't going to be a company that is going to be long-term dividend payer such as Coca-Cola. And again, with market multiples, I don't really put too much emphasis on this specifically because they don't have good competitors. This isn't a Visa to MasterCard situation. This is a company that does completely different things to multiple companies that do completely different things. So we actually took more of our Monte Carlo simulation we'll get into. Now, in terms of our scenario and sensitivity analysis, this is where I can bring up some of the concerns I have with fundamental analysis, but I wouldn't change what we did at all. So we actually used the WACC function in the Bloomberg terminal to come up with our WACC or discount rate. And as you can see, it was 18.56%. This is very large, and it's very hard to overcome this, especially when you want to take a conservative good estimate of a long-term growth rate. And admittedly, looking back at this, I don't love the WACC. I don't love the long-term growth rate. And the WACC's so high, as I mentioned earlier, because our weight of debt is practically zero. It's like a 99% weight of equity. So they'd have to lever up to significantly drop their WACC, and they just don't have a need to yet. So they are being punished a bit on a fundamental analysis side, but Overall, that's why we have a WACC at such a high rate. And then why we have a long-term growth rate of 5%. This is really just an estimate. We wanted a conservative estimate. Typically what you see is the mature firms, you could see something like a 2 to 3% long-term growth rate estimate, and then tech stuff like Google, you could see like a 6%. We wanted to give a conservative, especially because when we apply our standard deviations to this, you can see drastic jumps, and we didn't want anything to be like too far-fetched, but honestly this is a very conservative estimate personally. And then our scenario analysis, where we compared a base case, a poor case, a good economic conditions case, and an expected intrinsic value. Basically, we took what the company had already confirmed as its 2030 guidelines, not guidelines, 2030 guidance, and we kind of went on the conservative side of that. What if they underperform it slightly? What if they meet right in the middle? And what if they actually excel because they have a history of doing that? And that's where we were able to come up with our scenario analysis there. Again, wouldn't put too much stock into those. So now we get into some of the really interesting things. This is a breakdown of the Monte Carlo simulation. So we ran our two-stage DCF model with changes to the long-term growth rate and the WACC and a couple other factors about 10,000 different times, and we were consistently getting in overvalued territory, unfortunately. And I'll bring that up later on. So we are left with our recommendation. Two things can be true, and this might also be a large factor if I'm reading Benjamin Graham's The Intelligent Investor again, and so it's something I'm thinking about. But two things can be true. One, you can have an incredible company that's going to be around for a long time, be a monopoly, have all of these great factors for it, and it can also be overvalued. Those two things are not mutually exclusive. In short-term timing rise, they're on a incredible 40% run in 6 months. That right there can take it from a potential buy to a hold very, very fast. I would, in terms of this recommendation, err on the side of holding. I wouldn't rush out of your position in ASML. I think it's an incredible company, and I was really, really disappointed that with some of our fundamental analysis, we weren't able to get into buying areas, but it wouldn't sit right with me to not really get that many valuation models that in this case I think could be used. Yes, we could get the market multiples, but as I've already mentioned, I don't really like the market multiples here. It just wouldn't sit right for me to get all these valuation models that I don't think fit, that were the only ones we got undervalued scenarios, and then the rest we got overvalued, to rush out and tell you it's a screaming buy. Even though I think the company and the underlying fundamentals are great, I think that in the long term, right, if I look at this as, and I feel pretty confident that ASML will have basically zero competition for 15 years, but what if the AI bubble pops? You might see a 30% reduction, and then it's an incredible time to rush in. If this goes anywhere near intrinsic value again, I am for sure going to be picking up more ASML, but just right now in this short-term pricing, I see it as slightly overvalued. So overall, that was a bit of a more in-depth video. Oh wow, that is a long time. This is going to be by far my longest video, so hopefully if this gets some good interaction and people really like this, I'll try and make more of these types where I go really, really in depth. Please let me know what you think, and thank you very, very much for checking out today's video. I really appreciate it. So I hope you have a great rest of your day, and thank you again.